Hello, welcome everybody. Last time we were here together was approximately a week ago, and I went through a rundown on how to use spread analysis in different charts. And in that video, a lot of you, I realize, are not commodity traders, but it's important, as I pointed out in that video. Number one, commodities gives us seasonality, and so we have high probability trades set up in looking at spread analysis. And as I also mentioned, spreads can kind of give us the undertone strength or weakness of a market. A couple things that we were looking at was that hog, the long December candle and the short hogs, and that spread's working out amazingly well. In addition, we have some specific grain trades, and you notice that regardless of the media's constant haranguing about recession and recession fears, and I think that's what it really is. And I mean, it's like every single network, and it just seems that from anyone that's an anti-Trump person, the big thing is to get Trump out, we need a recession, or we need people to believe we're in a recession. Now, I don't want to make this political, but this is political. The market is being affected by politics, which again is what is derived out of fiscal policy changes. Next is monetary policy, which is the Federal Reserve. I mean, there's so much that a quarter rate cut's going to do for the world, right? I mean, you don't get a quarter point rate payment on your credit card, right? So banks are loaning to each other overnight at like next to nothing, and they're giving it to the public on credit card debt at like loan shark rates. So the moral of the story is banks should fare well here, except for maybe the international conglomerate with exposure to maybe places like Turkey, et cetera, et cetera. Bank of America, they missed, and they're okay on earnings. I think, and what we see in the market right now is some supportive factors going into the domestic regional banks. Regions Financial is one. I'll share that with you in just a moment. And that's what the topic du jour is. Our spread analysis, if you look at last week's video at the very end, and around 14 minutes into that presentation, talked about the Russell outperforming relative to the S&Ps. It's that time for that January effect is what was at the end of that video. So if you didn't watch the entirety and you got bored with cattle and you got bored with seasonalities and you got bored with high probability trade setups, but at the very least you understood and got a lesson on how to use spread analysis using Thinkorswim. Our newsletter, and I'll just bring it into focus for you in the monitor number 3, the third monitor over here. A couple things in this week's newsletter that we've done is we've raised bids for AT&T, CVS. We raised bids, but we also put on Tuesday a bull call spread on CVS. Autodesk, Ralph Lauren. Last week we bought in on Under Armour. We bought in a half position in Netgear. We exited Occidental. We were trying to buy NVIDIA. We never got filled, and we chased it, and we never got filled on NVIDIA. But good call there, because we were looking for major upside out of NVIDIA. Again, technology and growth. So we bought a bull call spread in the Qs, and we bought a bull call spread in the IWM as a result of that analysis that I gave. We felt that the technology would outperform, and Russell would start to outperform, and sure enough, it has. So we'll get to that in just a second. Next, what am I doing in this week's newsletter? Well, here's our current positions. We are long Cardinal held from 46.66. Today we took half profit on that because it was up from our current position. This was up 8%. So just to prove a point, you don't need to trade earnings on like Netflix or things like that to make money in this particular market. You have to look at the risks. You have to look at the rewards. And while everyone wants to see immediate results and instant gratification, we also need to show performance, and we need consistency, and we have to look at the value between what our anticipated profit potential is in a non-guaranteed world versus what the risk or cost of doing business is. And that's some of the key dead giveaways of trading in the market. That's why we use technical analysis to help put an edge on our side. And that's why I do these videos, to share with you my methodology in using technical analysis. So with that said, part of the technical techniques that we use is looking at spread and seasonal analysis. And this is the spread, if you can see in the video here I was talking about, the buying the D's cattle selling hogs, Swiss franc, gasoline, bonds versus notes. And this is what's going on in the newsletter. Our year-to-date performance, obviously we're up nicely on a year-to-date basis. Our options trades are up sharply, and this is only a partial list showing from the beginning of June to right now, which is October 16th. So with that stated, what do we see in the markets right now? What do my scans show? And what I'm looking in the market, and I'm going to flip over because we're in the main trading room. We're trading the E-mini S&Ps. We look at that. We have the Qs, we have the Dow, we have the Russell. And the Russell is one I want to start to talk about right now because it's part of the growth story. So this is Thinkorswim. And what we look at is a couple things that I've covered. One in this book called Candlestick Pivot Point Trading Triggers. And this is the book that I'm in the process with all these little notes, as you can see here, for the second edition. It's about 2 years late. Sorry. You know, I'm working on it. If you're John Wiley, my editor at John Wiley and Sons, this is the book that launched the whole concept of combining candlestick analysis and pivot points. It's what really started people to take notice of not just candlesticks, but integrating pivot points. And I've worked with some of the top educators. Steve Nissen, a good friend, he was amazed at the combination, and we actually created an indicator together, the NPI, the Nissen Person Indicator. It's on Genesis. It still works. It's very valuable. So I've worked with a lot of people, and in fact, a couple of my indicators right here on Thinkorswim, on TD Ameritrade, they lease these from me, and you will find them under John Person. Now, what do we have here is the person's pivots with the PPS indicator, and those are those arrows. You can see an arrow right here. You can see that orange arrow is a sell signal, and the blue arrow buy signals. Now, certain sell signals can be avoided and filtered out, especially when combined with integrating very choice indicators. Like I like to tell people, I don't have a lot of indicators, but I have the right interwoven indicators to give me an edge. I have a price momentum, which are the arrows. I have pivots to help me locate value of a market. When the pivots start to change from making a price structure of lower lows, right? Lower pivot values. We had blue below blue, blue below prior blue. But when the price action starts to close greater than higher degree time frame pivots. So what you see on your chart in this Russell, for example, is these dots are daily pivot points. The blue is the weekly. So one indicator that I like to use in person's pivots is that they filter out, they just don't give me the support and resistance. And that's the one thing you'll notice is missing here is the support and resistance. What I like to see is a change in momentum of the market. When I get the daily pivot greater than weekly pivot, it gives me the insight, and I'll repeat that. When the daily pivot is greater than weekly pivot, it shows that there's a value change from negative trend to positive reversal. When with the right condition, such as an increase in volume, and in this tool I use on balance volume. Down below is my relative strength tool. It's called Person's Market Catcher, PMC. This gives us the idea of stocks in 4 different relationships. Bright blue means that that particular stock is outperforming relative to the S&P 500. And that's what money chasers go for, higher relative strength stocks or segments or ETFs versus the S&P. Next, dark blue means it's starting to lose momentum and underperform relative to the overall benchmark. Red bad if long, so I'll just make it real simple. Red means that the market is now in a negative structure or price action relative to the S&Ps. And then there's fuchsia. Fuchsia means that the market's improving. That stock is improving versus the S&P performance. When a stock goes down in price, but the relative strength starts to make higher lows, that's a convergence. It's a mean reversion signal. It says that the lows are probably in. And then we look for price reversals. And that's what we got here in the Russell. And the spread analysis that we did that I shared with you how to look at that spread was starting to form higher highs and higher lows. So growth, when I say in the video today, this is growth. This is the growth sector. This is the Russell, the small cap. We also come in a very strong seasonal time frame to be long the Russell. It's called the January effect. Some years it's early. Remember, most major institutional investors, wealth managers, avoided the Russell this year. It's negative on the year. It's negative versus, well, it's not negative on the year, but it's negative relative to where it was last September. Let's take a look. Here's where we are now, and there's the peak last August and September when we had that fateful sell-off. We've not played what I call the condiment trade, catch-up. It hasn't caught up to relative to the S&Ps. Whereas you take a look at the SPY, and I'll change this chart for you here, SPY, and the spiders, we took out the, if you notice here is last September's highs. So the SPY with dividends, et cetera, and valuation in the SPY is better than a year ago. Russell not. Why? People were afraid that there's no growth. We're going into recession. Trade war tariffs with China was going to cause small cap companies that don't provide dividends, they weren't going to provide any real rate of returns. So what has a major effect on the Russell? Small cap banks, the regionals. So one of the areas that I would say when we look at our scans, Regions Financial is one that populated this Friday, by the way. Notice what the weekly histogram is sharing. This is showing that relative to the S&Ps, Regions Financial has been outperforming and maintaining value. That suggests another thing. If we can now get a momentum of price close greater than last week's high, so Friday at 3 o'clock and 59 minutes and 45 seconds, this market is greater than last week's high, this would trigger and initiate a bullish price momentum buy signal. And so with upside volume, relative strength improvement, this is the kind of things that we look for as far as buy signals in the market. So anyway, what we are now focused on, if we get a concentration of buy signals in the regional bank sector, it's going to weigh on the Russell to the upside growth. So I think we're going to get into that growth space, and then we can start looking. This is kind of like the trade that nobody, it's the redheaded stepchild. Nobody likes the Russell. No one's probably talking about it right now because it's earnings season and they want to talk about, you know, what Bank of America did. They want to talk about Netflix, you know, the juicy, really high active stuff. Meanwhile, really low risk, high probability trades slip by a lot of investors. So don't let that slip by you. The methodology that I teach, combining the right interwoven analysis, momentum, volume, relative strength, not the relative strength from Wells Wilder and oscillator price tool, but performance relative strength. That's the key that gives us an edge in trading equities. Now, as I move forward, and I'm going to put this back, restore that, because I'm infringing on our own trading room, I will go over and switch to our algo room. So we run 2 live trading rooms. One, we talk about stocks, stock options, trades. We have new clients that have made their first options trade, finally getting more confidence to trade options. Thanks for the analysis and guidance and doing well. That's pretty cool. So we all closed out one trade and moved on. That's pretty cool. Good call. They're in the money on another trade for someone else. And let's go into the algo room and share with you what we see there. All right, so I just switched over to the algo room. So we have 2 rooms, a stock room with Thinkorswim and a trade station. So you'll notice here we have a couple things. The first thing is, if I use this little screen drawing tool, you'll notice this is the S&P a 5-minute model. We're in an active short quick day trade. It shows up on the board. It was short at 92 3/4. We're at 91. The trade's up $175. Crude oil, it's in an active long. It went long this morning. And this crude oil model is unbelievable. It's a great model. Anyway, it's got out of half the position because as it gets near blue line is the profit. Red is the initial risk. When the market gets close to the profit but doesn't get there, it jams a stop on half the position to take something off, and then we have a protective stop on the balance, right? This did get stopped out of half the position at a small profit, and as you can see, it is still long. One contract from 52.94, it's up 660 on the one lot. So this, in the live trading room, we only trade literally 2 lots per market because that way we can scale out. And that's what we've done here. Current model 60-minute SPY is long. VXX on the 120-minute volatility took profits. VXX on our 60-minute model is still in and will probably jam a stop up here. One thing that I see happening is volume on the 60-minute VIX is upticking, which tells me we're probably going to get some kind of a dead cat bounce, and then we'll see late in the afternoon how that works out. What does that mean to me? Probably go up in the VIX one more time, which means another little mini downdraft in equities. 15-minute volume here is selling off. As you can see, this is a volume indicator. It's a proprietary volume momentum indicator. This is what we have in our live trading room. So the algo rooms are doing pretty good. The algo strategies are doing good. Why do we have British pound? Because the euro currency has a very tight, narrow range. And the British pound is something we've been using since the beginning of summer. And actually, it's also another pretty good Forex or foreign currency markets. For day trading and swing trading, we need two things: volume and we need ranges. So crude oil is a dynamic market. S&P's obviously very dynamic, and that's how we roll with the performance again in the room. So moving forward, what my feeling is simply, and I'm going to just change this here, this is my advanced decline analysis. And what I see here is we have a special situation in the advanced decline. We have a short-term moving average versus long-term moving average, which crossed over finally, generating a buy with upside volume momentum right here in the volume indicator. Does that a conflict? Well, what it suggests is that longer term we have a little buy signal. But in order for that buy signal to have generated, it came at the expense of higher prices, which means we could get a couple-day pullback, and that pullback should be bought vigorously. And what sectors do you want to be focused in on? End of story. Final comment. Technology and growth. With that said, I'll update another video, and I hope you found value. At least we share with you what we're doing in our live trading community, how I perform with our weekly advisory service, and more importantly, how I teach people to trade successfully. If you're interested in learning more about my methodology, down here in Palm Beach, we have a live trading seminar, and I know we haven't really promoted this at all for you guys or let you know, and that's my bad, and I'm sorry for not letting you know what we've got going on. But if you're down here in South Florida and you're not trick-or-treating, we got some really nice treats for everybody with a 3-day intensive seminar, which you can find on our website, personsplanet.com. Go to seminars. We have a financial cruise, which is unbelievable. We're going to Thailand, a group of traders. We're going to Singapore. We're going to Thailand and Malaysia. It's going to be exciting. And we got a group of really, really, really great people. Not only that, but pretty experienced traders at that. So the trading seminar that I'm talking about here is right here. You can find information, and it's a 3-day trader intensive. We are going to be covering these topics: cause of momentum, market performance tools, how do I use that market catcher better, trade station function, how do we do back testing. So everything about trading successfully and using empirical data, that's what we're talking about. And how do we use momentum, and when do we use mean reverting strategies? Like markets that go down, why do we buy? When we have setups on convergences. Thanks for watching. And again, if you like what you have seen so far, thumbs up. If you have comments and suggestions of something you'd like better, put it in the comment box below. Thanks for listening. And again, I hope to see you at the live trading seminar here in North Palm Beach or Palm Beach Gardens, Florida. Thanks again.